Today's market action with Ariel Investments Vice Chairman Charlie Bobrinskoy and Hennion and Walsh Asset Management President and CIO Kevin Mahn. Thank you both for being here. Kevin, let's start with you. So chips leading the way, very decent performance for the NASDAQ. Lighter week, of course, with the holiday and so forth. But what's your read on today's action?
I think today's rally in chips should remind all investors that the AI revolution is a long road, and there's going to be many ups and downs and many potholes along the way. And semiconductors and chips will likely remain a critical component of the overall AI ecosystem, but not the only component. Let's not forget about energy, data centers, hardware, and software. And then, of course, NVIDIA is not the only semiconductor and chip opportunity that's out there. Look at Broadcom, look at Advanced Micro, look at even Intel. All priced pretty rich right now, but all have more growth ahead. And if I can remind everybody watching right now, NVIDIA is going to become the hub of the AI ecosystem. They have very aggressive delivery schedules ahead with the Ultra version next year at Blackwell, and of course Rubin and the Ultra version of Rubin coming in 2027 after that, plus their continued growth in data centers. I wouldn't bet against NVIDIA. Well,
and of course they're comprising such a big part of the overall market as well. Charlie, I want to turn to you. Given kind of what we've seen with NVIDIA, what we've seen with chips this year, which there's no way to really describe the market action in 2024 without them, would you be rebalancing your portfolio now in anticipation of 2025? And if so, how?
Yeah, if I owned a lot of chip stocks in NVIDIA, I would absolutely be rebalancing. I mean, at this point, it is very dangerous to own stocks where they are so popular. I teach classes at a couple of 8th grades. And the one thing that these 8th graders all want to do is own chip stocks in NVIDIA. They tend to want to own what's worked in the past and don't care a lot about valuation. I'm not saying at this point I would sell it all, but clearly there's a very high expectations in these names. We're contrarian investors. We try to buy what hasn't gone up, and clearly semiconductors are not that.
Yeah, Charlie, I mean, I know that's typically your stock and trade. It's your temperament and orientation is to look at what is not appreciated by the market yet. It's paid off over time, but it's been tough this year. It's a very uneven performance, even though it's a very lucrative year for the second straight year for the indexes. Do we have the ingredients for more cyclical stocks, value stocks to start to work, given this rethink of what the Fed's going to do and just maybe a little bit of a stutter step in some parts of the economy?
Yeah, as you know, Mike, it's tough for us value investors to make short-term predictions. We don't think we or anybody else is good. But the core answer to your question is the ingredients are there. We have very high-quality value names trading at very reasonable prices when the rest of the market is very expensive, when interest rates should be coming down, and when there are some negatives that could start to go away. We could start to have the situation in Russia-Ukraine get a little better. We could start to have the situation in the Mideast, which has been so fraught, get a little better. But we have great companies like the Goldman Sachs's of the world and a lot of energy names and building materials names trading for very reasonable multiples. So the ingredients are there, but it's been tricky versus growth.